Yeah, Apple is certainly the most vulnerable US technology company in this US-China trade tensions. That's because it makes about 20% of its revenues from China. It shipped about 44 million iPhones last year in China, and it has around 40 stores. It's the most successful US company that's managed to crack the Chinese market, and for that reason it is at risk. The dangers here, of course, is that China could potentially clamp down on any of the services offers, the likes of the App Store, perhaps even Apple Music. It can also perhaps disrupt some of the suppliers in its supply chain, which could affect iPhones too, and it could, like US did to Huawei, say actually the iPhones are a national security risk. If any of that rhetoric comes out around the iPhone, that could be a real danger, and we saw the reaction on the share price yesterday, which shows you that investors are worried about Apple. But however, some of the other FANG stocks are a little bit more insulated. If you look at Alphabet, it's been blocked, the Google service in China, since 2010. Yes, it does have some investments in China, but largely insulated. The big danger, of course, is the Android mobile operating system. It provides to around 77% of smartphones in China, and any disruption to Android could hit Google too. However, if you look at the others, Facebook, Amazon, Netflix, they very much have tiny operations. In fact, Netflix isn't even present in China. Facebook is blocked, therefore seem a lot more insulated from this trade war. Let's move over to the Chinese side. What companies in China could be affected by this? Now, we've seen what's happened with ZTE. The company came close to being crippled and bankrupt on the back of these trade sanctions. So we've seen what's happened there. But I want to move on to some of the other companies we have perhaps not talked about. Alibaba, for example, it lists some of those US stores on its online platform in China. It sells products to the US as well, and it has cloud operations as well, a data center in the US. Any disruption and tariffs on these products could make things more expensive for the company and hurt some of its ability to operate in the US. Finally, Huawei, of course, has had a lot of big issues in the US, notably the fact that the US intelligence officials said its smartphones could be used to spy on US people. So those are likely to continue, and it looks like the Chinese tech companies have much more to lose than the US.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.